What's good? What's good? Welcome back to Invest and Trade with Jax. Good early afternoon from Canada. Spent a lot of the morning looking at the charts today, so a little bit later with the videos, but that's okay. So Polygon's currently sitting at 208. We're going to go over some other little bit of strategy here. We're down about 4.75 on the day. We're seeing a market cap of 14.46 billion. 24-hour volume is 2 billion. Ladies and gentlemen, if you're new, hold on guys, let me just quickly adjust this mic just so it's more comfortable for me. Sorry, there we go. Okay, it's kind of bothering me for some reason, but check out crypto.com, the world's fastest growing crypto app, and you can grab one of their incredible Visa cards for cashback in crypto, free Spotify, Netflix, Prime, travel incentives, $25 just for signing up through my referral. Incredible platform, growing absolutely rapidly. All right, guys, so we're here on the 4-hour time frame. Okay, so if your stop loss was at 193, 192, it never hit, depending on your exchange, but if it did hit, I'll kind of go over some scenarios here. But my stop loss was at 193. This is Binance, and it never hit on Binance. I trade on Bybit and it stopped at 194, so I'm still in my trade. However, guys, if your stop loss was hit, as you can see here, the bears tried to push down the price, like they were shooting arrows down on the bulls, and then the bulls were like, Spartans, shields, and they blocked the arrows and they shoot the price right back up. So in this case, what you can do, because this is a bounce zone, right, you can put your stop loss at 193, but then you can re-enter. So we had our first entry from that last pump. We had 200 here, 200 here, 200 here. So we had $600 in our trade. So our average price was 193. I sold more last night. I took about 50% of my profits up here at your take profit zone. So if your stop loss was right here, so let's say you put 200 at each entry, you sold 50%. So you have $300 left in your trade, and your stop loss is sitting right here. So what you can do, if you want a dollar cost average, once again, you put a stop loss, but then you put 200 at the exact same price as a buy limit. So it hits your stop loss, closes your $300 trade, you break even on the rest of your trade, you re-enter once again with 200, and what you can do is dollar cost average once again, 193, 175, 152. That's what I have done here. So sometimes I like to wait to get to oversold levels. However, guys, it's not always going to reach oversold. You're going to come up, you're going to find a level of support. And what I'm thinking here, since the bulls push the price right back up, is that we may see a double top pattern where we come up, we test this level of resistance once again. We could see continuation, or we could get rejected. And you might be like, well, Jax, I want to start dollar cost averaging at oversold prices. Well, here's your options, guys. If you start dollar cost averaging, you can see 193. We're about midway on the 4-hour RSI. If you put 200 here and 200 here, you now have $400 in your trade. Here's your average price at 183. If you only start at 175, you have $200 in your trade. So if you bounce here, let's say our take profit zone is up here at 214. So let's say your first entry was 175. You have $200 in your trade. So you're looking at about a 20% profit, which is $40. So if you enter at 193, 175, and your average price is sitting at 183, you have $400 in your trade instead of 200. So if we come up here all the way to our take profit, that's about 17%. 17% of 200 is probably like $68, $70. So you would have made $40 with your first entry at 175. So if your first entry was at 175 with $200, you would have made $40. But if your first entry was at 193 and you also hit 175, your average price is higher, but you have more money in your trade. So when you see the bounce, you make more profit. And also, if price bounces off 193, well, you have $200 in your trade already. But if you were waiting for 175, then you have nothing in your trade. You hit your stop loss, you have nothing in your trade, and then price bounces back up and you're like, what the fuck? So there's better risk management down at 175, but you have less money in your trades. And that's exactly what happened with our last trade. Our first entry was here at 214, which price was right here. We had a buy zone right here, we had a buy zone right here. So we had $600 in our trade. But if we only had a buy zone here and here, we would have only had 400. And if we only had a buy zone all the way down at 175, we only had 200, right? So I'll always teach on my channel not to buy oversold, not to buy green, not to buy the pump, but wait wait for the pullback, but that doesn't necessarily mean that we have to wait for it to come all the way down to oversold on the 4-hour time frame. I was talking about that yesterday. Would be better to target oversold levels. However, I started thinking about, well, if you had, you know, 2 buy zones, you have more money in your trade, so you can start targeting the oversold levels on the 1 hour. You can see we saw a beautiful bounce right off of 30 on the RSI on the 1 hour, so you can use that time frame to target your oversold levels to place your buy-ins here. However, on the 4-hour chart, I think it's perfectly okay if we come down, you know, halfway on the RSI to have your first entry, and then 200, 200, 200. So if you come down to 175, you have $400 in your trade instead of only having $200 in your trade, just as an example, guys. All right, so let's get into this video. So my stop loss wasn't hit, so I'm still in my trade. I'll throw them up on the screen here. If your stop loss was hit, guys, and you didn't re-enter, well, we may see a double top pattern here where we push up to this level of resistance. Let me move this up at about 215 here. So you could enter if you'd like to with the stop loss underneath the structural support here, underneath the 0.786, just to see if we make that double top pattern here. But of course, what can also happen is you've come down, the bulls push the price up, and you fail to make that, and you fail to make it up to that take profit zone, and you see continuation. But usually when you see a wick like that, that signifies you're going to see a reversal and a push back to the upside. Right here, see this wick? Big push to the upside. We have our flash, oops. We had our flash crash. You can see this wick here. See this long wick? Big push to the upside. You can see right here as well, wick, push to the upside. Let me give you one more example. Right here is, oh, here's an example where we came down a little bit more. So we had a wick down, we trickled down, and then we pushed back to the upside. But as you can see here, wick, push back down to the upside. Right here, wick down, push back down to the upside. So we've just had a wick down once again, and you can see the bulls are starting to push the price back up for Matic. So do watch for a double top pattern where we come up. Let me grab my brush here. We come up, we hit resistance, we roll. If we break that neckline, that's when we can come back down to about 175, guys. But we also have a bullish reversal pattern. We have a left shoulder, big left shoulder here. We have a head, and we have a right shoulder starting to form. So if you see some consolidation in this range, we could form that inverse head and shoulders. And I'll give you your breakout target. This would be a huge breakout to the upside for Matic. Measure your neckline, boom, boom. This would be a very, very juicy breakout. That would take Matic all the way up to about over our next take profit zone, back up to this previous high here at about 265. Now, of course, you can trade breakouts. I'm not much of a breakout trader anymore, because usually when you're breaking out of your neckline, you're already trending towards overbought. So I prefer to buy support, you know, dollar cost average at support. I used to trade breakouts, and I did okay. I won more than I lost most of the time. Sometimes I lost big back in my early days of trading and getting liquidated. You can look to trade the breakout here, but we can also get rejected by that neckline and roll over. So we're going to jump into Matic here on the daily time frame. All right, guys, so we still have the possibility of that ABC correction where we've come up in this channel. Wave 1, wave 2, wave 3, wave 4, wave 5, and it can be followed by an ABC. So if we fail to break that high, if we create the double top, we could see that play out for Matic. And the way to invalidate that is to come up and break our high here. It's just going to be a short one today, guys. I have a lot to do today, but I wanted to get this video out. I thought it was important here. So we do have our bull run target 677 at 1181, 1767, but right now our bull run target is the 1.618 from our Elliott wave theory at 677. If you want to look more into Elliott wave theory, please check it out, research it yourself. I don't want to go into it, you know, too many times when I'm making videos here. So we'll quickly finish off the video here on the 4-hour time frame. So if you hit your stop loss here, you weren't able to get back into your trade. That's okay, guys. Sometimes that happens. You can play that possibility of that double top. That is usually the sign of reversal. When you see a wick come down, it means the bulls are trying to push down the price, and the bears are like, I don't think so. A bunch of bearish pressure comes in, some bullish a bunch of bullish volume, bullish pressure, and it pushes the price back up. So we may see that double top pattern play out here for Matic. And if you'd like to start dollar cost averaging from this level, 193, that's what I'll be doing. If we do come back down here, it will hit my stop loss. I'll enter once again 200 at 193, 200, 175, 152, 132, 107. 200 is just an example, guys, and 63 equal amounts if you're spot trading. Bring your average price down halfway each time. Double your margin if you're leverage trading. Quick shout out to the Discord, guys, over 1,000 members. The DCA charts are posted in here for you to view at any time. And then we have over 1,000 members talking all things crypto, posting chart patterns. The price of a coffee. You can sign up through the Patreon. All right, much love. Take care.